talk about what happens here behind us and really what really makes Chicago unique, and that is the infrastructure, the market structure, and the execution that happens here in the Windy City. Jason Hicks joins me, Senior Sales Executive at Matrix Executions, here on the floor. Jason, it's great to have you.
Oliver, thanks for having us.
This is a cool spot because you have a really good insight into how things connect. I've learned a lot from you over the years.
Sure.
What's going on back here? Tell me from your perspective as somebody who knows a lot about execution, and this is the most active physical exchange,
Sure.
but there's, 18 other exchanges out there too?
18 other exchanges. What's actually happening here on the floor, there's two categories of people. There are brokers bringing interest to the floor, and there's locals or market makers that are sitting there waiting to trade against that interest, right?
Okay.
So these brokers, they bring a paired offer and a purchase to the floor. They can't just cross it without having everyone else give them a look, right? So what happens is, as you hear sometimes, the locals, the market makers stick their hands up, hey, I want a piece, hey, I want 5%, hey, I want 10%. And this is what's happening here on the SPX floor.
VIX is a little bit lively today. SPX and the index options, CBOE does almost all of it.
It does all of it.
All of it.
And specifically what's going on the SPX floor is that electronically you cannot cross an SPX product during the regular trading session for larger than 10 contracts at a time, right?
Okay.
So it's got to come back here, right? So that's why it's still one of the most active, if not the most active physical floor here in our space.
When you're thinking about execution and where things connect, how much do the other 17 exchanges factor into that process? I mean, everybody's kind of got their sweet spot. When it comes to equity and options trading, it gets a little bit more distributed, but it still is very much focused here.
Sure. Well, outside of SPX, outside of the single listed products, as a broker, you need to connect to all 18, soon to be 20 by the end of 2026, right? So if you're trading SPY options, if you're trading MicroStrategy, if you're trading IBIT options, any of those multiple listed products, it's not just a CBOE world, it's an all 18 options exchange world.
Okay.
So you have to connect to all of them. If there's liquidity on one of those floors you're not connected to, and your customer is looking for the interest, you're going to get a phone call. You might even lose a customer, right?
Okay.
So it's paramount that outside of SPX and VIX to be everywhere at the same time.
Okay. What I kind of think, is it correct the way I've described it to people that some people back here are monitoring the machines, the others are kind of fighting against them, trying to find a little bit of edge? I mean, is that still where every single millisecond or any proximity of physicality that can bring you something, to your client?
No, absolutely. There's, you have, again, brokers were on the brokerage side, but on the other side of the trade, you have prop shops, you have market makers that are looking at every single tick of the underlying, their perceived view, their opinions on volatility of the market to see, hey, maybe I can get a penny here, maybe I can get, absolutely. That's a fair characterization.
There is a lot of people like to assume, and obviously the algorithmic trading and the machines have dominated a lot, but they
Sure.
kind of assume that then, as similar, analogously, the way people talk about, I think, ChatGPT and AI in a way too, is they forget that people are programming these things,
right,
and they're doing things that we're telling them to do still.
Yep.
The fact that that number of exchanges is growing, to your point, 20 coming, and a seventh exchange operator, IEX, I mean, that means they must be adding value. They must be adding something to this equation still if people are finding that there is a market for this and it's growing.
Right, you're absolutely right, and that's actually the biggest, probably the controversy in our space is another set of exchanges worth it? You have the market maker community that has a quote on all those. They have all those symbols, the options on all those symbols to put up a bid and an offer. Then you have us on the brokerage community. We have to connect into them and send the orders there. So to the extent, yes, there's perceived the value add, but that's probably the biggest argument back and forth happening in our industry right now.
Okay. I speaking of AI, I got a question that we asked the AI.
Okay.
Let's roll it here. I asked, how much does trade execution really matter for the everyday investor? And the ICTV AI says the easy answer is not much if you buy and hold forever. Small slippage doesn't matter. But in practice, most everyday investors trade more than they think, and that's where execution starts to compound. It's not about account size, it's about routing. Institutions get midpoint fills, retail often gets funneled into, quote, good enough pricing. Execution can become the invisible fee that adds up, and behavior magnifies it if you're over trading. What do you think about that answer as it pertains to how the everyday person should think about what's happening?
Right. I like to use this concept of execution alpha, right? Like, how can I get the best price for the everyday trader, everyday investor, as quickly and as efficiently as possible? As certainly, if you're buying and holding, it doesn't matter. To the AI's point, it doesn't matter. If you're over trading, bad fills accumulate, right? They accumulate, and then over time, that leads to poorer and poorer execution alpha, which leads to less capital in your account.
It can add up.
It can
basically.
absolutely add. Yes.
Now, all right. Now, what about because really, obviously, what you're doing and your work is talking with the bigger institutions, the people who are putting on bigger size. What do they need to see from execution? How do you demonstrate value? How do you go and say, hey, we're doing it better than they are doing
Sure.
it? Like, what is that? What do the mean streets of execution look like?
Right. There's a couple metrics that people like to measure on. There's the explicit execution costs.
Okay.
If you're ripping the screens, if you're lifting offers, and if you have an institutional size order, there's exchange take fees that over time accumulate, right? So there's that. And then there's something called price improvement, or what I like to call execution alpha. How far inside the FAR, let's assume you're a buyer, let's assume you're lifting an offer. How far inside the FAR take can I get a fill, right? Penny, 2 penny, 3 pennies. Over time, again, that execution alpha number accumulates, and that can turn into real significant numbers, thousands, tens of thousands, millions of dollars. And that's something that we track, right? On top of giving the access to the options markets, we monitor that. We make sure, A, the fills aren't slipping from just a routing perspective, and then B, that the fills are good from an NBBO perspective.
This is also implicitly a discussion about market efficiency, the efficient market hypothesis, which kind of gets blown out of the water
Sure.
from this because this is all about inefficiencies and finding and plugging leaks, right?
Right. No, absolutely. If a bid or an offer stands out, someone's going to hit that bid, lift that offer. That's the machines are that good at this point. So to your exact point.
How does the explosion of retail trading, the post-COVID options boom, this trend that hasn't stopped,
right?
How much of that is creating opportunity to find those midpoints and to wring out more from this entire operation, essentially?
No, absolutely. So with the retail boom, like the retail brokers are really focused on a tight bid and a tight offer and getting filled inside the spread, basically, right? So what a broker can do is, because of that, it's forced the edge to be given back almost to the retail community who's trading more and more. They're expecting better. They want more.
Yeah. Tell me about the products that you see kind of making the biggest splash, the biggest waves. You've got really good insight into who is, I'll say, stressing the system.
Sure.
But I use that term in a positive way.
Yeah.
Changes, new products. I think about some of the buffer stuff that we've been talking about a lot. Calamos is doing auto callables.
Right.
There's a lot of things that are moving from the options trading world into the more packaged product world.
Sure.
That's going out to advisors. It's starting to put some pretty heavy volume onto the system. What stands out to you as being meaningful or momentous right now?
Sure. The biggest one that comes to mind are flex options. Those have been around for a long time, but you can definitely see the uptick in trading there. We do about 58,000 contracts a day. They're about 1.2, 1.3 contracts a day as far as volume goes. And there's different product sets. There's different use cases on that. To your exact point, there's still some microstructure stuff that needs to be ironed out, because it's not an easy thing from a structural perspective to trade, because you can basically make a contract on the fly, right? That's not easy from from a routing brokerage perspective. That's not easy from an OCC perspective. As that ecosystem builds itself out, you'll expect even further growth. So I would expect that to even compound even further.
So the infrastructure and the roads and the toll booths and all that stuff is changing actively as well.
Specifically because of flex options. Let's give you a little bit of inside baseball. So every morning, the OCC tells the exchanges and the brokerage world, hey, these are the options that you're allowed to trade, right? Outside of some intraday ads because of big movements or some corporate actions. So with this flex option space becoming as big and as strong as it's become, every part of the ecosystem that's hung on to that OCC security master, the archetype's been completely changed, right?
Wow.
So now you have to have a database system that can build a contract on the fly. If you're a market maker, you have to be able to price something on the fly. So there's a lot on the line that still hasn't been fleshed out. And as that gets fleshed out and more efficient, you'll see, I would expect there to be more and more volume coming to that product.
Very cool.